Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. Since late March, possibly mid-February, two patterns have caught the mood of this market, with possibly a third one developing. The first was the previously mentioned mid-February to early May pink descending triangle pattern type, which we have just finished with. It is not a perfect pattern by any means. However, the pink upper trend line, though previously breached, does show merit, and the flattish pink lower trend line, currently at 538, did hold merit, though with changeover I may be forced to rethink this. The second pattern still utilizes the pink lower trend line, but instead is smaller and dates from mid-March to date, with a bright red upper trend line, currently at 550. This had a break on the downside at the end of April, but with changeover, prices have found themselves back within the descending triangle once more. Finally, there is the unhighlighted mid-March to mid-April bearish shift picture, with prices right now just under the upper time, currently at 543. All three, for now, are seeming bearish patterns. The last one especially, and I earlier gave some potential targets below for the first larger pink descending triangle of a primary target X in the 490 zone and a secondary harder to reach target X1 down in the 471 zone. I said 2 weeks ago, and I quote, I'm not too sure about these two, but for now they will do. End of quote. I still approach them in the same way this week, and the reason why is because I suspect there was and is some pretty good support below, specifically the not too far distant 38.2% absolute Fibonacci line at 521. This held up the market effectively back in August last year, and though pierced this time, did not stabilize below it, even before changeover. So, on the top side, I'd watch the bright red downtrend, as well as the moving averages and the December 2020 low at 566, whilst below, well, we have a changeover gap to start trying to fill in between 525 to 537, and that is first before the 38.2% Fibonacci line. I'm also mindful of the gently declining purple neckline, currently 541, of the February to April 2024 reverse head and shoulders bottom, though I'm tending to regard this more than anything as a nuisance right now. Chicago corn. A major move was seen here at the end of February and going into March. The end of the upwards move we'd seen since the start of the year, and a quite sharp move lower. At the time I said, and I quote, this all raises the question as to whether we have the potential here for a further bearish halfway hesitation or a double bottom, end of quote. I even back then laid out some potential targets below for a move lower, but these turned out to be wrong, and I have retired them all. Instead, the market followed the path for a double bottom, with a primary target X at 497 and a secondary target X2 at 504. 2 weeks ago, we reached target X at 497, but immediately pulled away lower. This put on hold the secondary, harder to reach target X2, up at 504. Looking at prices now, well, let's just say that primary target X at 497 was enough on the top side, and that I'll retire the secondary, harder to reach target X1, up at 504 after this commentary. Instead, this week I have drawn a mid-February to mid-April bearish Andrews picture, which, whilst not being exact, well, the upper time, currently at 448, though breached on a number of occasions, still shows the bearish angle of attack, currently above the market, with the middle time below, currently at 390. For now, I have chosen this steeper bearish Andrews pitchhawk over the shallower bearish shift pitchhawk, as I think it gives a more suitable representation of the way the market is moving lower. However, that being said, whilst it is not represented here, the time's next crossover this coming Monday, the 19th of May, so watch out for one or more of the following then: a change in trend, a reinforcement of an existing trend, volatility. Coincidentally, after changeover this week, prices are now testing the 50% absolute Fibonacci line at 425. So it is worth being cautious right now. Kansas City wheat. Since mid-February, two major patterns have developed here, one of which is still live, and a third pattern that is no longer operational, but from which we have some echoes that resonate even today. The first pattern is a mid-February to late April sideways triangle, made up from the bright pink uptrend and bright red downtrend. It is not a great looking pattern by any means, but it nevertheless still exists. And 4 weeks ago, prices pushed down below the pink lower trend line, currently at 591, whilst at the same time following on lower from a mid-March to early May bearish halfway hesitation pattern. The second pattern is a February to March bearish shift pitchfork, with prices still live within this pattern, testing the unhighlighted lower time, currently at 504, piercing it but reverting back upwards before we had changeover this week. I should point out that below we have the shallow, unreconstructed December 1999 to date uptrend, currently at 503. This is what, in my opinion, helped halt the decline and turn prices higher. It is super old one, over 25 years old, and one that deserves respect. Finally, 2 weeks ago, prices broke down through the unhighlighted lower time, currently 549, of the significant, very shallow late August to early December 2024 bullish shift pitchfork. This week we have seen this lower time act as resistance, as it is sometimes something I've seen with prices racing along the underside of a broken lower time in other markets. We also have the 38.2% absolute Fibonacci line that is being tested, though did not provide that much of a support in recent weeks compared to the August 2024 low at 527. Okay, so going back to the first pattern again, the sideways triangle. I said 2 weeks ago, and I quote, "All this action has nevertheless still left us with some targets below for the sideways triangle pattern type. We have a primary target X in the 522 zone, not too far away, and a secondary hardest to reach target X1 down in the 471 zone. I'm not too sure about these two, but for now they will do." End of quote. The primary target X did very nicely, being achieved soon after my video back then, but we still have the harder secondary target X1 still open. I'm still not too sure about this lower secondary target, but as I said before, for now it will do. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.